I don't know what, 3-4 years ago, I took a little break from them and told my wife I was quitting. She looked at me like I was crazy. And I said, I'm gonna launch my own business. And, I sat in a room with tons of people at a little conference one day. And I realized that nobody in that conference that was in real estate came from real estate. They all come from different walks of life. And I was like, well, if I've been doing real estate for 20 years, I know everything about buildings. I should be able to do pretty good here. Or I think I can.
Yeah.
And that was kind of the jump that made me, kind of turn my back on 20 years and look forward to the next 20.
Well, that's pretty amazing that you found that, because I know I found myself in similar circumstances in several different points. Welcome to the Yacht Captain Investor Podcast. I'm your host, Scott Kidd, where every week we dive deep into conversations with real estate pros, business owners, and maritime professionals about their mindset and journey to success. Please help support us on our journey and our channel by liking, subscribing, and commenting below so we can help you in your journey to success. How you doing today? Scott Kidd, the Yacht Captain Investor Podcast. I have my new friend of mine, Jon Weisskopf. He's calling in from Wisconsin. How you doing?
Doing great, Scott. I'm doing great, man. Thanks for having me on today.
All right, I'm doing great. Thank you for coming on, taking the time. For the couple of people that don't know who you are, because I know you're worldwide known. Tell us a little bit about yourself.
Oh man, grew up East Coast New Englander guy. Had a fond for tinkering with stuff, racing lawnmowers when I was a kid in my grandfather's backyard, breaking them, having to fix them, and led me to engineering school. I wanted to work for Ferrari and be a race engineer for them. That did not work out. But got a job designing air conditioning and power and stuff in commercial real estate, and my engineering career kind of took off. About halfway through my career, got a call from Apple and got a chance to interview and a job offer from Apple to go design and head up their engineering team for retail store development. Spent 10 years doing that, flew around the world, drove myself crazy, grinded myself to probably nothing, and decided it was time to actually do something good with my life. I say that in the best way possible. Good for Apple, but nobody needs more stores. And so, I don't know what, 3-4 years ago, I took a little break from them and told my wife I was quitting. She looked at me like I was crazy. And I said, I'm gonna launch my own business. And, I sat in a room with tons of people at a little conference one day. And I realized that nobody in that conference that was in real estate came from real estate. They all come from different walks of life. And I was like, well, if I've been doing real estate for 20 years, I know everything about buildings. I should be able to do pretty good here. Or I think I can.
Yeah.
And that was kind of the jump that made me, kind of turn my back on 20 years and look forward to the next 20.
Well, that's pretty amazing that you found that, because I know I found myself in similar circumstances in several different points in my life, and it was always when it's time to move, and you can't take anything away from it, because all those things that you did at those jobs and everything, it was a great experience. You probably met a lot of great people, and you built a lot of those skills that you're using now in what you're working on now. And what segment of real estate are you focusing on right now?
So, new into the game, right, in terms of ownership. I have a few multifamily properties that through syndication that I got some partners with. Bought an assisted living down in Hollywood, Florida last year. So that's been probably the last year of my life trying to figure out that whole asset class. I knew nothing about it. And decided to buy a $12 million property.
Yeah.
But what got me started early on, I lost a very big salary when I decided to quit. And I may have fallen for the trap that said that you could have passive income from real estate really fast. That's not true. That is not true. And I realized, I had equity. I had some money and stuff like that for my career to date. And somebody came to me and they needed a loan for earnest money for a multifamily property. And I said I didn't want to be an investor. I didn't want to leave my money in, but sure, I'd give you a short-term loan. And I did that one. And 2 months later, they called me back after they paid me. They're like, hey, would you want to do another one? Sure. A couple months later, they paid me back. A month later, they called again. Hey, want to do it again? And I just kind of got into private credit and private kind of lending, and been doing it for about 2 years now. And recently launched a fund that took me a bit to get to. And I love the space. I think it's an interesting space. Knock on wood, I haven't lost anything yet, so I'm still batting 1,000.
That's good. I mean, you seem to be very good with people and stuff, and so reading people and stuff, especially working at those large corporations and stuff, definitely carried over into vetting the loans and stuff. And I imagine all the loans you do are backed by hard assets, so you're on the debt side, so you get paid first, or you take the property.
Some of them have been unsecured. I gambled into the unsecured,
Oh wow,
high risk world.
went big.
But some maybe naivety at first. But I think it created, first it was, the first loan I did, I was one of 4 people giving a loan. It was the 3 partners, and they just needed another 100,000 out of 400 for their EMD. So, I kind of looked at it as, look, I need to get into this. You're risking 300. I'm going to risk 100. Odds are you probably want to lose your money less than I want to lose mine.
They got scared.
And that I learned the process, but made friends, made colleagues, made partnerships at the same time. I was able to score some general partner shares with my loan as part of my, the unsecured loan that I made. So, they still own that today. I watch it. I join the GP meetings and things like that. I'm a small percentage, very small. So I don't take voting rights or anything like that. But that ponied into the next one, and then into the next one. And what I found was that I built relationships. And so the only loans I do are to people that I know, or people that are referred to me from somebody that I know and trust already. So I don't take loans from anybody that I answer the phone to. One of them, I talked about it, assisted living. I made a loan to a gentleman. He wanted more money. I said, well, let's meet. I met him on site of the assisted living facility
in Hollywood.
And I was walking around, and I gave him a report afterwards. And he's like, what was this, man? I was just meeting you for fun. I was like, yeah, but I know you were buying it. I figured, I'm good at these things. I can tell this stuff I'm building. So here's my full report. This is what you're in for. And he goes, well, heck, you want to buy it with me? We're best friends. We talk every day.
Oh, nice.
Cool. So it's, you just don't know, right? You got to be open. Yeah. You got to go out of your way. You got to show things. They talk about adding value and just giving things and nothing in return. And, he's taught me a ton about business and, so yeah, I don't know.
Well, that's pretty interesting. Let's unpack that a little bit, because, if you're okay to share that, because assisted living is certainly a different, that's a whole nother business model than like the multifamily space, because you're really just have residents and rents and stuff like that. But assisted living, you have to have nurses and on-staff people, and there's a lot more regulation to that. So when you walk through, what did you see that you could help with?
So I really, being an engineer, I've been designing buildings for about 20 years. So I gave him a report based on, if it was me looking at that building, what would I want to do to it? Or what do I think need to be done with it? Where did I see risks from infrastructure? The property was, how many years is it? It's 3 different buildings. I think they date from 25 to 45 years old.
Oh, wow.
So all different mixes of age. Has its own on-site generator, all of these things. And so I just kind of gave him, it wasn't much. I think it was a page, maybe a page and a half. It wasn't special, but it was, it was me saying, look, if you bought this, you're going to have to pay some money eventually, right?
Yeah.
CapEx is coming. It's not a perfect building.
Yeah.
First property ever invested in the let's just say we have CapEx problems.
Oh.
Right? All the cash flow was going to CapEx. We underestimated CapEx in the deal, right? By a lot. So, those things catch you big. So that was kind of my first foray, but going into it, it is a totally different ballgame. I mean, overnight, I became an employer of 45 people.
Mm-hmm. Yeah. So what do you have, like 45 people? I would imagine, what do you have, like 150 beds or something like that, maybe?
114. Yeah. Okay. And, we have we have people, it's all hourly. Most of it is hourly. I have one full-time person who's my administrator. She happens to be fantastic. She happens to be the daughter of the seller.
Oh, okay.
That stayed on. So it's an interesting dynamic, but she grew up owning the facility. The guys owned it from the beginning. Or owned it from the beginning.
And so she's is because I've heard people have mixed reviews with legacy employees and stuff, especially when they're tied to the last owner. I would see that maybe sometimes they're used to doing things a certain way, and maybe sometimes it's kind of a paper napkin approach to the costs and everything else, and doing the.
Let's just say coming from Apple to a family-owned business is a little bit of a There's a lack of things, but this is what somebody asked me this the other day, and I learned this early on in Apple. I got to travel the world a lot, and you come in with Apple, you think you will hold all the power, and I was a fairly good engineer, and I would go to China and said, "You got to do this," and these people would look at me like, "What? We don't do that there. We don't do it this way."
No, yeah, culture.
And I had to learn. What they did was not wrong. It was just not what I was used to over here in America, right? Certain type of system or what have you. And I learned very early on that you had to, it was more about where we were getting to, not the way we got there in a way. Yeah. And so, first I had to learn the business. I knew nothing about assisted livings. I had started taking training to get my administrator license in Florida and things like that. So I understood the basics. But first it was, how do they run? You just tell me, how do you do your thing? I'm not here to change anything. Mm-hmm. And then slowly over time, it was, okay, what can I change in the background? What do I know I want to change? And then how do I do it? A lot of it was documentation, right? Their contracts were all the same contract. They had the same rent price on every contract, but every single resident paid a different amount.
Oh.
And they didn't really know what every resident paid. Like it was very discombobulated, right? Now we knew what they paid from financials, from monthly income, from things like that, but poor documentation, right? So you couldn't really say, well, now I want to increase your rent. Well, wait, right? So a lot of just that level of detail, so we put in tracking databases, right? How do we track rent? Who pays? They get paid by cash, check, direct deposit, Social Security, Medicaid. So it was, I think she was very eager to prove herself, which became good. She distanced herself great, right? And I think I also put a lot of responsibility in her hands. Like, look, I'm remote. You know what you're doing. I don't. You've done this for a very long time. I haven't. I'm here to just enhance what you're already doing. I'm not here to change. And we have a great relationship. I think you have to be, I wish things had to happen faster. Maybe that's on me as the manager and not pushing for things. Maybe it's both ways. So I don't see fault, but it was, I learned a ton, right? I can't lose her. Well, she's invaluable.
Yeah, I would imagine that, it's a nuanced approach with her where you have to, realize that she's used to doing things a certain way and, say, hey, we're going to be implementing these things that are actually going to save you time and, make it easier for you to manage the place, but because you can look at it and then walk through because, there's that old adage, if you can measure it, you can manage it, so, and if you can't measure the residents' payments and stuff like that, then you don't know when you need to raise or, how you're going to be able to make the next quarter, go up or down or, because you might have taxes coming up and insurance you need to set aside for everything. So it's going to make the books a little more creative, shall you say.
Delayed income is very big in Medicaid payments and things like that. So that was hard. That was hard for me to handle.
Are you like net 30 or net 60 or anything like that, or
the way so we have 3 different contracts with the 3 big Medicaid providers in the state of Florida. Some of them pay ahead of the month. So I have 40 residents that are on your Medicaid program, right? So you confirm, yes, we still have 40 enrolled and they're still here. They're still residents. Great. Okay. I'm paying you 40. We'll true up at the end of the month. There's others that want to see proof, do it, and then pay you later. But But then all of a sudden something fell through the system. We're like, no, that person's no longer authorized. Well, they are on the state website. They're authorized. Well, in our system, they're not. Well, that's your problem. Okay, well, we're not paying you because our system says they're not.
But they're here.
Yeah. So you're expecting 80 and all of a sudden you get a check for 60, right? And then so we pay an outside service to help us manage that stuff. That was one thing that I was not going to get myself involved in.
Yeah, that you could probably get into the weeds pretty quickly with especially the whole medical system. That could be, pretty hairy. So interesting. So the private credit got you into one smaller loans, then it went to multifamily, then it went to assisted living, and then now you said you're launching a fund.
So
launching it. Okay.
Yep. So, it's a 506B, so I can't give any details about it. Right now it's only to people that are part of our network at the moment. But I don't think I ever intended to really launch a fund with private credit. But a couple, for that assisted living, we came up short on our raise.
Oh.
And I had two good friends in that raise, and one person's wire never came through. And I called my buddy, and I know my buddy has some cash, and I said, "Hey, look, I need 150 grand." And he goes, "Okay, like next week." And I go, "No, like I need it before the end of the day, dude. Like I need it now."
Yeah.
And he goes, "Dude, I'm like just about to go into a meeting." I'm like. Okay, well, when's your meeting over? Like, because I'm calling you right then. I was like, go text your broker, like, sell the stock, like, whatever you need. Like, we need that money. And he goes, well, what do I get out of it? I'm like, I'll give you 10%. I'll pay you back in 3 months. Okay. And he goes, 10% annually? I was like, no, 10% flat. And he goes, really? And he goes, what's my collateral? I was like, I'll give you collateral on my house, against my house.
Yeah.
And he's like, all right, send me a document. And so I did it. I ended up, paid him back. He was an investor too. It was a short-term loan. We paid him back, gave him his money. And he goes, yo, this was fun. Let's do another one. Nice. And I was like, listen, it's fun because it was your best friend. And you knew I would there's no risk for you to get your money back with me.
Yeah.
And stuff like that. But he then became interested. He joined another loan for me. I ended up kind of over-promising. I had 2 loans, get asked at the same time. And I was like, hey, I got another $100,000 shortfall. You want to come in? Sure. And so he's like, let's do this more. And so then I had another friend ask me about it, and I was like, well, man, maybe I should just launch a fund.
That's pretty cool because then you're just, since it's a 506B and I understand you cannot talk about it, the details about it, but in general terms, it sounds like it's your friends and relationships that you've made over a long time. Because generally 506B has to be that, and you're just loaning for projects and stuff where people have a short-term cash shortfall, or they're flipping a house, or they earnest money, or what have you. So I know I have a couple friends of mine that do that, and they do really well with it because I think they wrote 100+ loans in a year, and they did pretty well. But they've been doing it for, I think, 10 years. So
okay,
and they're not really. Theirs is also a 506C, and they can advertise a little bit, but they don't seem to really do too much of that because they have big enough of a network, and they said they don't, like yourself, they don't want to really loan or do business with people they really don't know. They're not looking to, scale up and take on all those problems where somebody, if you don't necessarily know that person and something goes a little bit not quite the way it was anticipated, then you get into some other issues that, lawsuits and other kind of things, so it can get complicated in a hurry,
Yeah. One of the other reasons I did it, being new, I have a nice career. I have a nice, career that I can show track record and stuff for. But being newer into the investing world, as somebody trying to raise capital, everybody wants to see track record and trust and proof and get that, right? I'm the same way, loaning out money or investing money and stuff like that. And what I heard a lot over the early years was, man, Jon, 50, 100,000, that's a lot of money if I don't know you. right?
Yeah.
Or you haven't done this a lot yet, or can you take anything smaller? And so, with the private credit thing, we have quite low minimums, that allow people to come in, and it was for me, and I have a bunch of investors that have been on my network for a while, have been interested. I've been warming up, and they're all starting to join, right? And a lot of it was, we really appreciate you offering something at a much lower entry point. And I was like, look, this is all about building trust. Let me build trust on something small.
Yeah.
And it's me to earn, and I hope that I can earn your second investment, right? So it was that way. I saw this gap in my thing. I could go raise money for bigger people. I like to do a lot on my own, even if it takes me longer. That's just who I am.
Yeah.
So I kind of thought about it, right? How do I offer something that I know I can do, that I have a track record? Now I'm about to do my 14th loan. I still told you I was on the phone, and we can get into that. Right before I got on with you, I'm about to do my 14th loan. Haven't failed at any yet. Great returns. I'm in great returns on them all. So I have a track record now. How do I bring this to people? Low entry point. And the economy is crazy right now. The market sucks right now, right? People want some stability. And multifamily hasn't been doing all that great.
Yeah, so, some of it has, and some areas better than others, but the private credit and debt, being on the debt side is, if it's collateralized, people are more comfortable too. Also, a lot of people just want the cash flow, because I fell into that trap as well, as with the buy real estate and get passive income and stuff. But if you invest as an LP, or you invest in a fund or what have you, as a limited partner, it can be passive provided you pick the right sponsor, right fund manager, and stuff like that. But none of it was ever passive. It was all active. Some of them, dragging concrete, cutting concrete at midnight and dragging pipe out of the place, painting rooms and doing all kinds of stuff till late, and just going. But because we're launching a fund as well for our development projects. We got quite a few.
Tell me.
Yeah. And
what kind of development are you doing?
It's multifamily, townhomes, hotels.
Nice.
There's some flex space and also condos. We have 4 projects in Dallas. We have some medical offices in Kansas City, and we have a hotel project coming up in St. Louis. It's going to be 200 keys, and then 200 condos there, and also 200 units for multifamily. So it's going to be a customizable fund. It is a customizable fund, so we can put all the assets in there, and then majority of the stuff is going to be built to sell. But if the stuff is cash flowing nicely, some of them may end up staying in the fund based on, if the investors are happier with just the cash flow and they don't want to necessarily turn over. But what we usually focus on is, the equity multiple and the yield on cost in like year 3, 4, and 5, because it's that kind of stuff is important, and really when you're talking about track record and stuff, our development team, they've been doing it for 35 years and built in the billion, stuff like that. So I wish I would have learned sooner to jump on with people. Well, of course, I didn't quite meet the people with the extensive track record that wanted to bring me in. That took a while to meet a lot of different people, and I chose some good and bad partnerships. But it's all a learning. Like you working at Apple, at a certain point, you're like, this isn't where I need to be. So I move, but it's all exciting, for me. That's why I started the podcast and stuff, because I get to meet more and more people, and both of us are very similar. We like talking to people and like seeing where people's heads are at, and seeing, and I always just like to see where I can add value or just help people out, connect. I'm really good at connecting with people, so that, and I never really saw the value in it till I got into the real estate world, or, some of it was on the yachts too, because I always help people, because in the yacht world, because I got into, I always did some kind of side hustle because the job market is very unstable. We work on somebody's toy. So if they decide not
Yeah.
to have it today, we're all gone today. So,
Yeah.
always need to have some kind of money coming in. There's where the stigma of the cash flow came out. I was like, oh, that sounds like a great idea. And, but, you know, it's just one of those things that we got to go through it and find the right people. And it really, I stress this a lot. It's a big tip for anyone that's starting out any business. Just find people you're aligned with, and you know they don't necessarily have to have the best track record, but you all just have to be on the same page. Like
Yeah.
you found a lot of people that you could loan money to that needed it, and then you ended up being, you build a huge network of people that end up being, a lot of people end up being your friends and stuff, and you're like, hey, what do you got going? And I like that you have like a smaller entry point because uh, I've other people I know that do crowdfunding, and they say it's because a lot of times people that maybe have 5, 10, 20,000 or whatever, they don't know that they could put them into these type of instruments.
Yeah. Yeah. One, I was going to say, I love Kansas City. I got a multifamily there. Just completed a EMD loan, earnest money loan for an operator there, and I met that through a referral.
Okay.
Who this woman worked with? Her name's Beth. Fantastic. She worked for the company that I did all the first 4 loans with. And so she started sending me stuff. Well, she connected me with these operators. They needed it. I come to find out, kickoff call, that one of their main capital raisers is a guy that I know very well, friends
Nice.
with, and I'm on a GP on a deal in Kansas City with them. So I was like, okay, you're now. I don't even have to do due diligence. You're checking boxes for me already.
We're good here. Yeah,
And that's good. It's comforting, right? But I love the Kansas City market. Fantastic market. I got a 72 unit multifamily in Leavenworth, so kind of secondary, maybe tertiary, depending on how you look at it.
Yeah.
The multifamily that I just did the loan on for, I think they're closing today. Actually, I think it's closing today. So I get a small GP stake in that one for the loan. I'm blanking on the name, but it's tertiary to Kansas City. I'm blanking on the town Ridge.
Okay.
Ridgeview. I gotta check anyway.
Leavenworth's where the prison is.
Leavenworth's where the prison is, but also the military base.
Military, yeah, that's true. Yeah, Leavenworth is the military prison.
Yeah.
Yeah, that's
and there's a big military base there, right? So the funny enough about that one, so the main operator, the largest partner there, the largest GP sponsor there, grew up military, grew up in Kansas City, has his own property management business. Property manager runs the properties for us there. Another one, the sponsor, I think that the second largest sponsor, also in the military, friends. So
that's great.
You align, you say to align on stuff. Look, I had a really bad partnership that just fell through. I had a big falling out, right? I can't tell why it fell out, kind of because of some legal issues, that I'm going to, but we were aligned, but the alignment started to dissipate.
Yeah.
And you can look back and say, crap, I wasted time. I did all this, but you know what? I learned. It's not that I didn't learn from them. I hope they learned from me. Things did not go the right way. Life will go on. Life will continue to move, but it's not something that keeps me from wanting to meet new people and do new things again. I learned something from it. I probably had red flags, and I was probably jaded myself.
Yeah.
For maybe really seeing them fully because I was too committed to the outcome rather than seeing maybe where that I was being, that my vision was starting to
that's a big
blur a little bit.
That's a big tip for anyone listening is that don't be all consumed with a deal where you don't take a hard look at the people you're doing business with, because the people you're doing with a bad team can make a great deal go bad for sure. And a great team
people can change, man.
Yeah, people can change.
They might be good at the first, but things can change, and I'll leave people with this. I think this is important, Scott, is I learned very early in my life that business is business, personal life is personal life.
Yeah.
And the second that personal life crosses into business, and even if it doesn't have to own your own business, right? I would go to work. I used to tell myself I went to my work and my job to support my personal life, right? But if I did bad at my job, or if I messed up in my job, right? I had friends that would go out and drink and get too drunk and make a fool of themselves, right? I know people, right? You do that, well, guess what? Now you've just hurt your personal life.
Yeah.
So keep the two separate. But unfortunately, these partners, their personal issues caused poor business decisions.
Yeah, that's very true, and that's a great tip. It's it's one of those things where you have to keep that professional line. You might be friendly, and you might eventually. The way I look at it is, and where this works for on the boats and stuff in any business too. Just because I'm friendly doesn't mean I'm your friend. And it goes without saying that we're there to work first. And if we become friends or great friends as a result of it, that's a huge bonus.
Yes.
But business got to get done first, or else there's no we're not really doing each other justice. And when it gets too friendly, and I've seen this a lot on the boats and in real estate too, where it gets too friendly and people take without intention, they take liberties with each other. You know what I mean? Without really trying, and it just happens that way because you get to have that deeper relationship, and then it ends up getting messy because the communication level wasn't quite there because it got a little too personal. Then it did get, it kind of went away from the business, and there's also a lot of times you have to go back and reevaluate, where you are with the team and everything else. It's that, a lot of times people, I imagine you had tons of meetings at Apple, which probably wore you out. But some of them are useful. I used to be in the tech world myself in Austin, Texas in the 90s and stuff, and we had a lot of meetings, and a lot of them we didn't need to have. Like some of them could have just been an email blast. But
it's the beauty of owning your own business now, man. I decide when I have meetings and who I have them with.
Yeah. You choose your time, who you're going to spend your time with, and that is so true. But what's next for you? Are you going to, what's your, like in 5 years, are you going to be still doing the loans and stuff and then accumulating assets, or do you have any kind of targets?
Yeah, definitely. I love the loan business. So, I hope that continues and I just continue to build my base. I don't want to be this big loan guy, but I do hope to build it to something that's a little bit more, I'll say, consistent, loans to income and all of that stuff. Right. So I'm trying to get there. I have a great partner that I'm building that loan business with. I am very big into modular. Okay. I'm about to close on a big loan, probably not my largest dollar size to date, but my most complicated one. I was talking to them before I got on the phone with you, and they are doing a modular apartment building.
Okay.
I want to build a modular home community, build to rent community in where I live up in northern Wisconsin. I think modular is just the wave of the future. It's kind of like, what the assembly line did for cars. I think modular is going to do to construction. And so anybody out there that wants to know where technology and things are going, from a guy that's built in 20 countries and done a lot of stuff in development, I think modular is where it's going. So if you can get in there, it's.
I've seen a lot
get in
with a lot of those, and I guess it just depends on who's building out the modular, the product. Yes. I guess because that's pretty important. Because we're doing stick builds and everything else, and that kind of stuff, and a lot of it we've been approached by quite a few people with modular, and the costs there's some costs that are I want to say hidden.
Just like anything else. Like anything else, you gotta know what you're buying, right?
They hit you with a low price point. I'm like, well, how are you getting it at this? And right now we're building it at this price in the same area. And then when you take out all their extra fees and everything, it's pretty close to the same. And then if it's close to the same, we might as well continue with what we're doing because our stuff's probably going to last longer. But I think you're absolutely right because you can put in that assembly line module. You know, what do you think about the 3D printing houses and stuff? It's not there yet. I know it's
I
not that close.
interviewed, so there's a company, I think it's Icon, out in Texas, right? And they just built the first, or not just, I don't know, maybe in the past couple of years, they built the first fully 3D printed,
Yeah, that was Austin. That was Austin. Yeah.
I think it's amazing. We were very interested in getting to them. They didn't, I think, at the time, the group that I was with, we were too small for them. Look, we have a crisis. We have a crisis in that we can't build fast enough. And that does not mean, look, by no means do I think stick build is going anywhere anytime fast.
No.
Look, I'm all into solar and things like that. I don't think oil is going anywhere anytime fast. Like it's not. Wake up, people. Like it's not. So, but I think it's, the thing that I learned with modular is it's about proximity.
Yeah.
I mean, it really has to go with areas where labor is not cheap. You go to big cities like LA, that's right at a port, New York, high union, Chicago, unions, right? Yeah. Like I live in a small town, right? And so there's not that much labor.
Mm-hmm.
So not that costs are extravagant, but if I can do things faster, look, I'm talking with a modular builder that's within 3 hours of my hometown that can build 6 modules in a 1,300 square foot home in 2 days.
Wow.
I face cold winters when construction stops in the wintertime unless you get the bid.
So you got 6 months? You got 6 month window to build.
You got to understand what you're facing and what your challenges are and how something might solve that challenge.
Yeah.
I also looked at modular in Las Vegas, and when I got the pricing for modular and I got the pricing for stick build beat it by significant amount.
Really?
Right? Because there was no modular builders in close proximity. The closest one was 5 hours away. I needed a football field of space to bring the modules to then post up so that I could then bring them to the construction site. And the cost of delivery alone, Scott, was the cost of 40 apartment units.
Yeah. Well, we used to my family was been in heavy trucks and heavy equipment for a long time. We had trash business. We had fuel business in Jamaica, and we had one of the things my dad was doing for a while was a lot of trucking, over the road hauling stuff, and some friends of his hauled a lot of that big stuff, and transportation costs have gone through the roof. It's expensive. Very expensive.
But if you think about it, where and I talk about resilience and the things that I do and to my investors and planning far out. And so, if you're in real estate, right, you can't think about tomorrow.
No.
You're in development, right? Yeah, today good, but what's 5-10 years? Like my business 10. Is not 3 years from is not the next 3 years. My business is you got to plan today, right? What do I see the next technologies, right? You have driverless trucks that are coming from Tesla, perhaps, right? And how can that change the transportation industry and just
and potentially building a factory where they can build sections of that closer to you and stuff like that, and and you're it being in, I think we're doing development and the fund. Like in my mind, it's 5 years, multi-billion-dollar fund, 10 years, another, X of multiple of that, or multiple funds, as we build and grow and everything, because we have so many projects and none of us are going anywhere. We have to be, real estate's a long game, and 5 and 10 years in the real estate world is really not that much.
Short. It's short.
It's like they say, the best time to buy is 20 years ago and now. Because like people, it's a little frustrating to me sometimes when people say, "Oh, I'm gonna wait," and this and that, and it's like, if you find a good deal and it's cash flow, you should just buy it. Not, I think of all those deals. I remember when I didn't think about it the right way. I lived in Fort Lauderdale, and this is probably about 20 years ago now. And then the financial crisis kind of hit a little couple years after that. And, I bought my first house for like 138,000, right? And then 2008, 9, it went down to like 50,000. And I thought about it in all the wrong ways. Like, geez, my house is worth $50,000 now. Like, oh, this sucks, but then the house across the street sold for $27,000. And then took another 6 months or a year to go, geez, I should have been buying the block. And then by that point, people were buying chunks, 10 and 20 of them. So at that point, I could have bought a few of them and then been able to turn it over. But I'd missed the.
And today, everything's probably worth hundreds and hundreds, right?
They're all at least 400,000. Every one of them. Even though it's a tiny thing. So I said, I'm never doing that again. So. You just definitely don't want to catch a falling knife, but you want to be. I came up with this saying that you can't catch the wave from the beach. You got to be in the water to catch the wave. You just have to be. You can't run out and catch it. There's no way. You can't paddle.
I told you. I think before I got a 5.5-year-old son, and how do you teach a young boy that is going to school for the first time and going into the world and seeing things and scared about stuff. And he asked me, I try to tell him, I tell him days that I make mistakes and how I screw up, and because I want him to not be scared of it, and he says, "What, Dad, why aren't you scared?" And I said, I look at things as what happens. I don't look at what happens if I fail. I look at it as what happens if I succeed. And he asked me today, what happens if you succeed in your business? And I said, I get more time with you. You and I get more half-day Fridays, right?
Yeah.
We can go play hooky, and every once in a while he gets to stay home from school and I take off from work and we play hooky and we just do stuff. And I think, if you don't, we're so scared what happens if you fail.
Yeah.
But man, there's the other side of the damn equation.
Yeah. We should always think to that, because I have another podcast to do with my friend Eddie Austin. It's the Inner Compass, Finding Your True North. And it's, we talk about that a lot. Why do we always think of worst case scenario? Why not the best case scenario? Because I love that everything you just said there, because it's teaching them, that failure is just a failure. It's a part of the success. It's one failure closer to the success, because you gotta fail. That's the learning. And you can ask any of these successful people that they'll probably tell you the worst story, the worst thing that ever happened to them, because they think about that all the time, as we all do, because that was their biggest learning moment. They might have forgotten about the hundreds of successes that they had that got them there. But it was those failures, those failures are those defining moments. And like, okay, when you tell your brain and you're getting up and you're like, you tell your brain, I'm still going, you're going to be like, your brain's going to go, okay, we're doing this. And it's not going to shut off. You
have to.
Yeah,
you have to. The most successful people have failed more often than they've been successful.
Yeah,
it just so happened that their failures led to some massive successes. Yeah, that paved the way for them to try other things. And trust me, they probably failed again. You just don't see it.
Yeah,
and the world doesn't talk about the time people failed. It talks about all the time people succeeded.
And the main thing with that is the reason why they eventually succeed is because they kept going.
Yeah, they got up again.
They didn't stop.
Yeah, get up.
Well, this has been absolutely great, and I look forward to talking more and following up later on and seeing where your debt fund has gone. Hearing more about this modular stuff. So if people want to find out more about you and what you're doing, where can they find you?
LinkedIn. I do everything on LinkedIn. I share all of my trials, my tribulations, I even talk about my biggest failures at Apple, and I had many of them. I screwed things up, right? And so, please find me on LinkedIn. I share everything. I try to share my experiences of what I've learned and what I've done and where also where I'm going and where I think the world might be headed. I'm not a financial expert. But I see where resiliency can play. So, I think I just got a different spin. And so please find me. And if nothing more, I hope I can teach something to people, right? And help you be successful in what you venture in.
Well, that's great, man. I mean, I really appreciate it because I know that's where we connected was on LinkedIn because I've read a bunch of your posts and I commented on. We talked a little bit and then eventually you came on here. So this is just the beginning. We're just getting started. So really cool. Well, thank you again so much for being here and taking the time to talk with us today.
Appreciate it. Thank you so much.
Well, this is I'm Scott Kidd, the Yacht Captain Investor Podcast, and it's just a friendly reminder that the best investment you can make, and the best and number one investment you can make, is the investment you make in yourself. Thank you. See you guys next time.